Good afternoon, everyone. Hope you and your families are keeping well during these unusual times. My name is Paul Street. I'm the president of Red Cloud Securities, Inc. And it's during these unprecedented times that there's many stocks that have corrected substantially in an attempt to account for the economic shock that's only now starting to come to light. We are of the opinion at Red Cloud that the precious metal space is going to be one of the first to kind of lead us out of this unusual time, and a lot of the valuations are very attractive, especially as central banks around the globe pump liquidity into the system to combat the negative economic impact of the COVID-19 epidemic that we're dealing with right now. It's important to remember that we're probably 10 to 15 days away from peak infection numbers in North America. But that being said, we will prevail. We will get through this. As a former mining analyst, I always like to focus on companies that have higher grade deposits. And the one that we have presenting to us today is arguably going to be one of the highest grade open pit mines in the world. Once they come online, the company is called Mako Mining Corp. Has all the ingredients to attract a lot of attention with high grades and low operating costs, and operations expected to start in 2020. On the call, we have Akiba Leisman, the CEO of Mako Mining. The format that we're going to go through here is we're going to have Akiba provide an update on Mako, go through the introduction, an update on construction, resource growth, and regional exploration, and corporate vision. And then we'll go to a Q&A session whereby we'll allow for people to ask questions via chat. And we'll try to get to as many of those as we can. Before getting into the formal session of the actual presentation, just a few disclosures. There's going to be many forward-looking statements made on this call, and we would direct listeners to cautionary notes contained within the corporate presentation on the company's website. For Red Cloud Securities, I'd highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or recommendations to buy or sell securities. And we note that this call does not take into account the particular situations or needs of individual investors. Participants should only rely on their own investigations to seek their own professional advice for the investment. So with that, it's important to also highlight from a specific disclosure standpoint, we visited the material operations for Mako early this year, and prior to that when they were in the initial stages of exploration as well. And in the last 12 months preceding this webinar, Red Cloud has performed investment banking services and has been retained under a service advisory agreement by the issuer. So with that, I'd like to pass it over to Akiba to give you an update on Mako.
So my name is Akiba Leisman. I am the CEO of Mako Mining. And we are in the middle of building what will be the highest grade open pit only mine in the world. We're approximately 60% done building our project. We announced a little over a week ago that we're slowing down the pace of construction as well as our exploration spend in relation to COVID-19. So we've reduced the employees at site from just over 400 to just under 250 people to really limit certainly expats coming outside of Nicaragua and into Nicaragua, but also people doing a weekly commute from Managua to our project in the northern part of Nicaragua, about a 5-hour drive away, just to keep the back and forth from the mine at an absolute minimum. But the construction still is going forward, albeit with a reduced workforce. So we took back our expected production date from late Q3 to sometime in Q4 of this year. And then when we get a firmer handle on what the new logistics regime will be going forward, we'll give a little bit more granular guidance as when we expect production to start. So when I talk about the highest grade open pit mine in the world, our expectations is that we're going to be delivering to our 500 ton per day mill that we're building right now in excess of 9 grams a ton. So that will be our diluted grade going to the mill. And at that throughput rate and our expected recoveries, that equates to approximately a high 40,000 ounce run rate at very, very deep first quartile costs. But that's not the only thing that we're doing. We made a discovery about 4 kilometers south of our San Albino mine, an area called Las Conchitas. We've put out pretty extraordinary drill results over the course of the last year or so that I'll go over in detail in a bit. And it's our estimation that we're going to be drilling that to create a maiden resource next year, and then to be in a position where we can mine that supplementary to our 500 ton per day mine to expand it to 1,000 tons a day sometime in the year 2022. And then thirdly, we are sitting on currently 150 square kilometers of ground, but we're in the very late stages of expanding that to close to 200 square kilometers. We hope to announce that this calendar month. But we're sitting on an over 150 square kilometers of ground, what we believe to be an orogenic gold mining system with showings all over the place. So there's a lot of exploration prospectivity on our ground. And then when the mine turns on later this year, we'll have the cash flow to start systematically exploring our district scale land package. On top of that, I used to work for the controlling shareholder of Mako. So Wexford Capital, which is a multi-billion-dollar private equity and hedge fund group, currently own just under 56% of the outstanding common stock of Mako. So they are a controlling shareholder in every sense of the word. And it's actually very beneficial to have a group like that backing us. So last year in July, they backstopped a Canadian $27 million rights offering that funded the majority of the capex of the project over at San Albino. And then about 6 weeks ago, they announced an unsecured term facility of US $15 million. That's 8%, no warrants. If it's outstanding for a little over a year, there's a small gold ounce bonus that Wexford is due. But for the first year, it's 8% paper, pretty cheap money. We've drawn down a total of US $10 million, so $5 million about 6 weeks ago, and then another $5 million yesterday afternoon. And then that should be just about sufficient for us to finish our project sometime in Q4. There's currently 583 million shares outstanding at the company. The share structure was expanded by 80% after that rights offering that was completed in July. In and around that time, I went into the market to purchase approximately 4.5 million shares. I've been in the market over the course of the last couple of weeks, purchasing another 750,000 shares at today's price. And ever since Wexford took full control of this company, which was a little over a year ago, the stock has started to perform, and that is not a coincidence. The predecessor company to Mako, in our estimation, was being mismanaged both at the managerial as well as the directorial level, and those have been rectified over the course of the last 12 years. And he's been a very supportive shareholder of the company, and also a very interesting individual. So he's always good to bounce ideas off of. For those that don't know Paul, he founded a very well-known investment banking boutique named Robertson Stevens. Back in the 70s, it was sold to Bank of America in 1997, focused on technology and biotech, but he's been a resources investor going back since the 1980s, and a very successful one at that. There are 50 million share options outstanding to management. The vast majority of those were granted when I took over as permanent CEO in August of last year. At the time, those options were granted at a strike price over 100% out of the money. So this was a demonstration of our view that the stock certainly a year ago was grossly undervalued. But even with me in the market in the last couple of weeks, we do believe relative to what this mine is capable of doing, it is not reflected in our current valuation. So a little bit about our operating team. So myself and Cesar Gonzalez both used to work for Wexford. We founded the predecessor company to Mako named Marlin Gold Mining back in 2012, and facilitated the merger of Marlin and Golden Rain to create Mako back at the end of 2018. Jesse Munoz, who's our chief operating officer, we've been working together for the last 10 years. He and his family used to own a small-scale engineering, procurement, and construction management firm with specific expertise in building and operating small to medium-scale gold mines in the Americas. So he's an absolutely essential part of our team. And it just shows that when we're involved in one of the biggest exogenous shocks to hit not only our industry, but the global economy over the last 100 years, it is essential to have people of Jesse's skill working for us. Now, this is what I mean by some of the drill results that we've put out over the last year. I just want to put this into perspective, is that this is an open pit mine. All of these drill holes were focused on open pitable mining depths. So we would consider that to be anywhere within 150 meters from surface or so. And one of my favorite anecdotes about the transition of management and the board was that when our previous CEO quit, I took over in March of last year, and we were going through some of the data. And there was a drill hole that was put in 2011 that hit 3 meters of 2-ounce material in an area outside of our current 1 million ounce resource, and about 30 meters from surface, 35 meters from surface. That was never followed up on. So think about this for a second. A 3-meter intercept, 2-ounce material, 60-gram material that was hit 9 years ago, and there wasn't a single dollar available to this company to follow up on those drill results, not because it wasn't available, but because the management and the board were really not receptive to doing anything other than getting the mine up and running as quickly as possible. So within hours of the managerial changes that we made in March, we commissioned a follow-up drill program on that. And then 2 months later, when the assays came back, we hit 13-ounce material. That's that last assay result that you see on the bottom of this page. 13-ounce material, 376 grams gold over a meter, situated about 35 meters from surface. All open pittable. These are flat-lying structures, so we can very easily get this to an open pit mining scenario. If you look to the south, it nearly outcrops in terms of what this area is, so very limited pre-strip. And then once we actually develop this particular area into an initial resource and then a mineable resource sometime in the next couple of years, we'll be using this area over at Las Conchitas to supplement our 500 ton per day mine and then expand it to 1,000 tons a day. So that's one example of Las Conchitas. We put out some drill results over the course of the last week and a half where we hit 84 grams over 1.6 meters. 8 holes were put out in that press release, as well as the one directly below it, that hit in excess of 23 grams, all situated within 80 meters from surface. So very continuous areas outside of our known resource, all open pittable, all can be very easily trucked to the mill once a 2-kilometer road is built between the Las Conchitas area and the San Albino mine that we're currently building right now. But also some of the infill holes that we've had. Remember, all of this is open pittable. We hit 47 grams over 2 meters true width, 13 meters from surface. 2-ounce material over 2 meters true width, 5 meters from surface, within a single mining bench from surface. This is an area that we're going to be mining once we turn the mine back on over the course of the next few months, that can then be stockpiled and eventually processed at the 500 ton per day plant that we're just over 60% done building. I challenge anybody on this call to compare these grades with anybody that's developing an open pit mine or that actually has an open pit mine today. So when we say that this is going to be the highest grade open pit only mine in the world, it's because that's what the grades and the assays that we're getting back from the exploration lab now, as well as what's been developed really over the course of the last 10 years between us and our predecessors that have developed the resource that exists today. Now, San Albino is kind of an interesting mine. There's a fairly interesting history associated with this. But let me go over a little bit about where we are in Nicaragua. So we're all the way in the north of the country, about a 5-hour drive from Managua. As of about a week ago, there were 3 other commercial operations in the country, 2 of which have decided, in their words, to temporarily shut down, that are owned and operated by Calibre Gold. We have taken the approach to make our mine as safe as possible, but we are committed to seeing this project get built, and we are committed to seeing that this gets up and running as quickly and as safely as possible. This is an important project to Nicaragua. This is an important project from an historical perspective, and it's certainly an important project for us, our employees, and all of the stakeholders associated with this asset. Now, Nicaragua is a very safe jurisdiction from a personal security perspective. It is an easy jurisdiction to deal with. We're in the process of shutting down and reclaiming a mine in Mexico, which became very challenging from a personal security perspective to operate in. The current tax regime over in Nicaragua is a 3% top line NSR royalty, as well as a 30% corporate income tax rate. Now, the history behind this is that the last time our mine was up and running was in the 1926. An American businessman started it up, and then his clerk and general manager at San Albino was a guy named Augusto Sandino. 6 weeks into operation, he hijacked the mine, used all the gold to finance the original Sandinista revolution to kick out the U.S. Marines in the late 1920s and the early 1930s. And then when Sandino was assassinated by the new Somoza government in 1933, this land went back into government ownership and really was put into a time capsule for a period of about 80 years. So very little exploration work was done on our property. One of the reasons why you can see multi-ounce intercepts sitting so close to surface is because this was put in a time capsule. Augusto Sandino is a folk legend in Nicaragua. You go down to Managua, it's the General Augusto Sandino International Airport. Whether you are a new Sandinista part of the government or in the opposition, everybody treats Sandino as a folk legend in Nicaragua. So even from a political perspective, it's actually very important for San Albino to get up and running because it's a symbol of pride for the government of Nicaragua. Now, a little bit about our published economics. The last time that we put out public economics was in 2015. As I kind of alluded to before, we didn't really see eye to eye with previous management. We've been involved with the project in one form or another since 2014, but it was not under our control until last year. There's a lot of input that we had with respect to the upfront CapEx and the engineering that went into this PEA, but very little in terms of how the resource was developed. So we'll first highlight that $21.1 million upfront CapEx number. There were a few material scope changes to that project that were made over the course of the next, the ensuing few years. That went up to $25.5 million, and we're basically tracking more or less on budget, even with the delays that we've experienced because of COVID. Now, where we actually did break ranks with former management was on the resource. This was put together really in a way that was designed intentionally, in my estimation, to make the mine look bigger than it is. So one of the first things that we did when the management was transitioned was to redo the geological model, incorporate post-2015 drilling into it, and the Cliff Notes version of what wound up happening was the grade of the deposit went up, and then the tonnage went down. I don't think there was actually a material change to the number of ounces in the deposit, but this is a much more structurally controlled deposit than what was being modeled before by previous management. So we do think that the in situ grade, and as evidenced by our infill results over the course of the last 13 or so months, will show grades higher than the 8 grams a ton here, and that's kind of why we're reasonably confident that the diluted head grade of this deposit will be somewhere in the 9 gram a ton rate. We have hired an external group to do an updated resource, so that will be out this calendar year. Some feedback from them is that they've actually never seen for these types of deposits geostatistics that are this well controlled. So our high grade is very, very well modeled, well behaved. So we're very confident that these higher grades are going to be maintained even after we mine it later this year. Now, grade drives everything. So this is a kind of us in comparison to some of our peer group. Because we have such a high grade mine, that will drive the economics of the project. where we stand relative to other high-grade open pit only mines in the world. Again, we're expecting to have a diluted head grade of somewhere in the 9-gram range. Some of the highest grade open pit mines that we've seen around the world that we can find are substantially lower than that. Now, these are larger scale operations where there's a lot of operational synergies with these larger mines. So take that with a little bit of a grain of salt. But we do expect to have our C1 cash costs comparable, if not lower, to some of these amongst our high-grade open pit only peer group companies. Now, what are we looking at on the exploration side? So just to give you a little bit of frame of reference, the San Albino deposit is what we are planning on mining. We actually started to mine in February, and then we suspended mining just under 2 weeks ago. That's that little yellow box with the arrow that says San Albino deposit. We're building the mill and infrastructure on the northeast of that box. Our Las Conchitas discovery, that 84-gram intercept that we announced last week, situated in that blue box immediately below that. As the crow flies, it's 2 kilometers distance between the southern end of our San Albino and the northern end of Las Conchitas. So if and when we have a mineable resource over at Las Conchitas, building a 2-kilometer haul road, it will connect to the southern end of our mining infrastructure over at San Albino, and then it's a short trucking distance up into the mill that we're building right now, all of which has footings and infrastructure capable of handling 1,000 tons a day. So our crusher is capable of handling 1,500 tons a day, so way in excess of our current needs and capacity. We are soon to have delivered. It's been a little bit of a logistical challenge to get these mills delivered, but we bought 2 500-ton per day mills. By next week, we'll have that delivered to site. So I'll show everybody some nice pictures of that when they do arrive. So that will be capable of handling 1,000 tons a day when all is said and done. We've built 5 CIL carbon and leach tanks to handle our 500-ton per day operation, but we built footings for 10 of them. So very limited CapEx in order for us to expand to 1,000 tons a day. But even outside of our 2 primary areas, one where we have a resource, the other one where we're pretty confident that we'll develop a resource, we are sitting on 23 kilometers of strike on our deposit itself, with showings, with prospecting, exploration pit results across the full 23 kilometers of strike. In fact, the gold goes off our property. That's not the same thing as saying that we have a 23-kilometer mine, but there's a high probability that we're going to find additional economic deposits across this 23-kilometer strike that we have. In fact, the gold showings do go off our property to the northeast and to the southwest. We are in the very late stages of acquiring a concession, or being granted a concession by the government to the northwest of this that will expand our land package even further. December of last year, we purchased from another publicly traded company the Puerto Rios concession. On their ground, there's no question that the San Albino vein continues on the other side of that river, the El Jicaro River. We've seen outcrops, and there are some trenched with assay results that show economic grades over there. So once we do get the mine up and running, there are some near-term targets as well as some longer-term regional targets that we'll be following up on with the cash flow that will be coming from the mine. Every single one of these dots is a prospecting sample that was taken, grading in excess of 1 gram. So it does show you that the full land package does have the ability to host gold. There are showings literally all over the place on the full 23 kilometers of strike. As the crow flies, a plan view of our operations, we have the San Albino deposit to the north. We are building our infrastructure to the northeast of that box. Las Conchitas directly to the south. The southern end of Las Conchitas is where we announced some of those most recent drill results. And then the expectation is that Las Conchitas will be the supplemental ore that will help us mine this at 1,000 tons a day by 2022. Now, one of the reasons why our project is so unique is that this is an orogenic quartz-hosted deposit, a narrow vein with coarse gold associated with it, which is actually not all that unique. I can come up with 10, 15, 20 different analogs around the world that have very similar type geology. What makes ours different, and unlike anything that we're aware of, is the flat-lying nature of our ore body. So unlike some of these high-grade narrow vein orogenic systems that you might see in Western Australia or Northern Canada, we do have the ability to open up our mine from an open pit perspective. So instead of spending hundreds of millions of dollars to get it up and running, we can spend $30 million to get it up and running, and eventually find additional mines with additional shallow dipping structures such as this elsewhere on our property to help supplement our mine life, as well as to expand our mine at 1,000 tons a day over the course of the next couple of years. So with that, I'll open the door to any questions about what we're experiencing operationally with our project, or even with the state of affairs with respect to COVID-19. So Paulo, I leave it.
Yeah, can you hear me, Akiba? Okay, so you have to appreciate that I'm getting inundated with a number of questions here, so I'll go straight to the line here. So the first question is from Tom. Love the mine photos that you post. Why don't other mid-sized or even larger companies do this kind of thing too?
Yeah, no, actually, this is a very important question just from a marketing perspective. So I've always been very suspect about social media. So I don't have a Facebook account because I don't trust them at all. So I kind of slowly dipped my feet in the water on Twitter about a year and a half ago with a little bit of A/B testing to see what was out there and kind of the response that I would get. There is no question that in terms of dollars spent relative to retail marketing, going out to old lady lunch steakhouses and things of the sort, it is really effective to get direct aligned communication to the investor base, not even just on the retail side, but even on the institutional side through social media. And then we got hit with the virus, where everybody is now experiencing a new work from home environment. I'm at the United States epicenter, so I live in Manhattan. My wife's a physician, so it's not like I can be out in the road marketing anyway. So I agree with you, is that I think I made this comment before on my Twitter account, that if you are a CEO and not on Twitter, you are not using your marketing dollars appropriately. Likewise, if you're a CEO that's on Twitter and not using your time to market appropriately, you're not using your time effectively. So I think it's essential, and obviously I'm glad that the people appreciate the direct line of communication that they can get from me, because it really not only helps me tell the story, but it also helps kind of formulate the story in my mind with a level of accountability. So you can go through, I don't delete any tweets, so you can go through my entire history and see what I said before. Not everything is going to turn out. There are a lot of operational risks in building a mining project, but at least we have some sort of accountability in terms of what we put out there direct to the investor universe that everybody is free to watch and verify.
Okay, especially in this unusual times, Twitter is going to really help. Give people a sense of what's happening real time. Another question: have you had any trouble getting materials into the country? And if you, based on the materials that you have in country, how much longer can you keep up the current pace of construction?
Yes, the border's a complete mess. So the mill is a little bit of a different situation in that it's such a large piece of equipment and such a high value piece of equipment that there's a lot more scrutiny with just in a normal course with respect to customs, but even with respect to border control and border points in general, everything is kind of slowed down. We were anticipating things getting substantially worse, so we kind of got as many consumables on site as we really could conceivably get. So I think we're kind of sitting on about 7 weeks of inventory at this point in terms of cement and stuff like that. Like our mine's not on, so it's not like we actually needed reagents at this point, which my understanding is they've become a little bit more difficult to get. Let me be very clear. This is affecting everybody. We have not seen the global supply chain this stressed since World War II. Certainly more than the financial crisis in that regard. Everybody will be affected. Whatever people's schedules that they told you, unless there was an update, will be delayed because of this. and you just have to manage through it. And we have very skilled operators to handle it as effectively as possible. We have the financial resources to deal with delays as they inevitably will come. Investors just have to deal with a much higher level of operational risk across the entire industry, and we just try to manage it as best we can. But there will be effects felt everywhere.
Okay. Next question from Chuck. Kiba, what is your estimate of the effect for every $100 rise per ounce in the price of gold? So I think what he's trying to say is what impact does that have on your financials? And I know that.
Sure. So I'm not sure if this is a good or bad thing, but because we're so high grade and so high margin, we're actually one of the, at least from our initial phase of operations, we're actually one of the least levered to gold prices assets out there. So a $100 increase in gold there's effectively let's call it on an all-in basis about a 35 to 40% tax rate. So let's say at 40% the tax rate, to keep the math simple. So $100 increase in gold means effectively $60 to our bottom line, right? So, and with that actually all that much in the way of operational synergies, just because we have such high margin ounces anyway. So if we're producing let's call it keep the math simple, 50,000 ounces a year. So that will add $3 million to the bottom line.
Okay. Next question from Andy. Can you give some historical background as to how Mako acquired the project and how it relates to the former Marlin? So I think there a little bit of background is what they're looking for there.
Yeah, it was a long, crazy story on how we got here. So myself and my colleague, Cesar Gonzalez, created Marlin back in 2012, small-scale mine that we developed, operated, and now we're shutting down in Mexico. 2014, we established, at the time, a subsidiary of Marlin called Sailfish Royalty Corp. Sailfish Royalty Corp did a deal with the previous management and directors of Golden Rain, which was actually the owner of the San Albino asset at the time, which effectively rendered the mine uneconomic. It was not a very good decision for them to take that deal that I struck for them in 2014. And then for really a period of 4.5 years, it was a cat and mouse game between Marlin, Sailfish, which eventually became a public company in early 2018, actually late 2017. And then eventually when the previous management realized that they weren't going to be advancing the project forward without a renegotiation of the royalty and a merger that was acceptable to us, we all got around a table and negotiated terms of the what was effectively a four-way merger. So between Marlin and Golden Rain, a Sailfish restructuring, and then a reduction of liabilities that were owed to the controlling shareholder, Wexford Capital, at the time. So even though this was a 4.5-year process to get everybody at the table, once everybody was in the right frame of mind to negotiate a deal, it took all of 2 days to negotiate the economics of what allowed us to create Mako as it is right now. So that royalty was restructured to a 3% top-line effective NSR on the San Albino mine, and then a 2% NSR on the remaining 137 square kilometers that we have on our land package right now.
Okay, and now this next question's from two people, so I'm just going to consolidate it. So both from Harold and James, basically asking whether or not you need to raise any additional funds before you start generating cash. Do we expect more financing post its production startup to fund the ramp-up stage? So that's actually a two-stage question. So maybe do we need money until we start producing cash, and do you need more capital to do the ramp-up?
Sure. So prior to when it became evident that we needed to down throttle because of the virus, so really it's a month ago, where I think our spidey sense was going up that we were going to have to slow down. The way that I described the $15 million U.S. Top-off financing with Wexford, and that was after the U.S. $20 million of rights offering that they backstopped. They were about around 3/4 of that. The rest were shareholders of Mako, other shareholders at Mako that put up the capital. I described that $15 million top-off financing as a breath-holding and belt-tightening amount, right? It's clear that the project, at a minimum, is 2 months delayed, and we're trying to get a little bit more granular detail on what the delay means. We're pretty confident that we'll get this up and running in Q4, but it could be as much as a 4-month delay to the project. We haven't seen any real material like blowouts in terms of capital, but just because of that delay, there are costs for starting mining in October as opposed to August. So I think a reasonable investor could expect a small gap in terms of what we have versus what we need to finish it. But one of the good things about having a shareholder with financial resources like Wexford is that we do have the ability to expand the loan if we need to. Likewise, we're still operating on the assumption that we're going to try our darndest to see if this $15 million is going to be sufficient. But if it's not, I don't see this $15 million need turning into much more than a $16 or $17 million need. It's not a huge number, but certainly COVID-19 has slowed things down. Slowing things down causes cost to go up. That is the world we live in, and luckily we have ways of mitigating that just because of our shareholder base.
Okay.
And actually,
the second part of the question.
On the ramp up part of the question. So I had this conversation with our COO just a few days ago. Is that we started mining in February, and part of that was like it's kind of an exercise to make sure that our mining contractor that we were training up from the start really understood how to mine this narrow vein open pit mining structure. So it's not conventional open pit mining that we're doing. It's very, very selective. So we wanted to actually start up, and we mined, I don't know, 75,000-80,000 tons of waste and ore in the 4 or 5 weeks that he was operating. In doing that, our expectations that we would have developed a reasonable sized stockpile, probably 40,000 tons of ore sitting in front of the crusher, as well as certain stockpile areas that we have. Clearly, that stockpile is going to be greatly reduced because we're kind of pushing off mining until we have enough personnel on site to manage that effectively. And in having a smaller stockpile, it lowers the flexibility of the operations. So whereas a month ago, there was really no reason to have a ramp up. You can basically start everything up at 500 tons a day. I think there's a reasonable chance that there will be a ramp up period over a few months. So I think investors should assume that at this point, although we're not ready to give formal guidance on that at this point.
And then I think the other second part of that question was more about the ramp up in terms of production. So to 1,000 tons a day, would you need equity for that? My guess would be you'd be sufficient cash flow to service debt and fund the actual ramp up. But
so I mean, some rough numbers on that. So right now, in our entire database of San Albino, which is drilled pretty close spacing at this point, stuff that we're comfortable with, is just over 70,000 meters of a drill program. So in Las Conchitas as an area is about 3.5 times as big surface area as San Albino, albeit I think we're focused on a smaller area. They're probably about a similar size to San Albino. So let's assume that we need 70,000 meters of drilling to get it to a mineable resource. 70,000 meters cost us about 150 all in for Corp. So was that 10-11 million bucks just from an exploration perspective? You add very limited capex. Most of it is really just on additional tailings capacity. So it will be in the single-digit million. So let's say, just spitballing a number out there, which I don't think is that unreasonable, US $20 million of capital from soup to nuts to get everything that we need to do to run this at at 1,000 tons a day. All of that can very easily be funded through cash flow from the 500 ton per day operation. We will be producing that high 40,000 ounce run rate in excess of $1,000 all-in margins if that 9 gram a ton diluted head grade holds up.
Okay. Question from Merrill asking about whether or not the company would contemplate a share rollback in the future.
Yeah, so we wouldn't do it outside of a normal course AGM because there's no real reason to spend that money. Likewise, nobody's actually going to be going to an AGM in this environment. But on the next one that we have a normal course, sure. I've always been ambivalent about it, but I've now seen enough evidence from a brokerage custodial basis, the potential for getting margin basis, so that will enhance liquidity, the ability to transition to a U.S. Stock listing basis, as well as index allocation at some point, which is somewhat connected to a U.S. listing too, basis. All of those kind of lead pretty firmly into the category that we probably should do a rollback of sorts, but it will be part of a normal course AGM.
Okay. Follow-up question from James. How many ounces projected for 2020 and 2021, notwithstanding your earlier comments that you made about things slowing down?
2020, who knows? Right. So there's a lot up in the air. We do expect the mine to get up and running. So I would say in Q4, 2021, our expectation is that we'll have a full year of production in front of us. So I'll call it high 40,000 ounces, but a lot of it is dependent on what the real diluted head grade is going to be. If it is 9 grams, we should be in the high 40,000 ounce range. If it is 9.5 grams, we'll be 50,000. If it is 8 grams, we'll be in the low 40,000 ounce range. So a lot is a proof in the pudding basis based on our ability to control dilution.
Okay, and yeah, and based on what we saw from the site visit, there's some good early signs there in terms of being able to distinguish the ore. But we'll be able to, we'll have to deliver the ounces before we can actually comment on it. Okay, so I will let people. There's no more questions on the line. I'll let people maybe come back with a few more questions. In the meantime, I wanted to ask a few questions here. So, given your experience, Akiba, and you and Caesar, because of your experience on the buy side, what's your outlook on the precious metal side of things?
Oh, so I was mentioning earlier in the week is that I've been in the gold mining industry since 2006. I was never a gold bug. The reason why I was attracted to this industry was really more about exploiting inefficiencies rather than speculating on where gold was going. It was about a year and a half ago that I became extremely bullish on where gold was going in the intermediate future. And now, with respect to what's going on with the virus response, the effective merger of the Fed with the U.S. Treasury, and that's no different than various treasuries and banks, central banks around the world, is such that we've now started the whatever it takes, MMT, whatever you want to call it, money printing mode of the cycle. So a few things are going to happen over the course of the next 3 years, as I see it. The first, we have to get over this humongous shock, right? So the first order of business is that irrespective of what happened today with Trump's conversation with KSM, we have a commodity price with MBS over at Saudi Arabia. We have a commodity price shock that will probably be relatively near-term deflationary in nature. We have an employment shock. The numbers that came out this morning in the U.S. are are basically anticipating just over a 10% unemployment rate, and that's only for the first 10 days of the effect. We will have an unemployment rate when all is said and done in excess of 20% in our country, which puts us on par with the Great Depression. So you're going to have to go through that shock. On the back end of this, with the central banks doing basically on a whatever it takes basis, things start stabilizing, and I do expect that to really happen towards the end of the year. You're going to have inflation. And if you don't have inflation, they're going to do more to create it. So it's at some point, whether it's as early as the end of this year or eventually over the course of the next 2 or 3 years, you are going to have the environment that every gold bug has been screaming about for the last 15 years, with very specious amounts of data, I might add. This is the first time that it's basically getting rained on right in their face. So I really do believe that we're going to have a sustainable rally in excess of $3,000 an ounce in the intermediate future. So call it 1 to 3 year time frame.
Yeah, it bodes well in terms of your ramp up as well. One other question, and I know there was a couple of people, I'm monitoring the chat here, that dropped off when you were talking about it. They wanted to kind of get a sense of when you're potentially putting out your resource update. So maybe I know you touched on it during your talk, but a few of those people were off and then back on again. So if you want to talk to that.
Yeah, we hired MDA. I guess they merged with another consulting group, so I actually forgot their official name now. But a group out of Reno, really professional group. They're finishing off their first pass, checking the models with the section over the course of the sections over the course of the next 3 weeks, I would say, and then it's just kind of getting an updated resource out there. My guess is that it will be incremental in nature. So our infill program was focused on a very, very small area of San Albino. I'm not even talking about Las Conchitas, which MDA haven't even started on at this point. So a very small area of what we call the West Pit. So that's on the northwestern part of our open pit mine plan. That's the area that we've infilled to 20 meter spacings. So this kind of small inner circle of a resource will be that first update. I don't see any reason why it should be out by the summer.
Okay. With that, I do not have any further questions. Obviously, Akiba can be contacted through his Twitter account if anybody wants any specific questions with regards to our analyst who covers it. Feel free to reach out to us here at Red Cloud. With that, want to thank Akiba and to take the time to update everyone, and want to wish everybody kind of a safe and speedy recovery at this unusual time. So thank you, Akiba. Appreciate it.
All right. Thank you, Paulo.
Oh, I did get one more question. I'm sorry. How is Ortega managing the COVID crisis?
He took the ignore it approach, for lack of a better word. In fact, a defiant approach, very very similar to how AMLO was handling it in Mexico. Is that AMLO is basically having these parades in Mexico City saying we have strong Aztec blood, therefore the virus is not going to affect us. And then the night before last, he decided to shut down all the Mexican mines. In Nicaragua, there was kind of a similar thing where there really weren't any obvious signs that COVID was in the country, so therefore it doesn't exist, right? The reality is that this is a global pandemic. It will be everywhere. So there are a few confirmed cases over in Managua. You do see politicians. I think it's fair to say that they're a little bit scared right now. But in terms of the policies in the country itself, it's still a business as usual, for better or worse. So our approach and one of the key objectives for our down throttling was to make sure that we operate within a community, so it's not a fly in and fly out basis. So not only were all of our expats either taken out of country or agreed to stay really for the foreseeable future. So that was done. Likewise, we eliminated just about all non-local contractors, and by local I mean kind of in El Jicaro and in Nueva Segovia more broadly. So I wanted to eliminate all commuting from Managua to the mine on a weekly basis to the extent possible. Anybody that comes into the mine from certainly abroad, but even from Managua will not only have symptoms checked, but people coming in from abroad will be in a 14-day mandatory quarantine before they enter into the community. We try to manage it as best we can. That being said, and this is going to be important, this virus is a global pandemic. It will be around. It will be endemic to the globe. There are no temporary decisions being made globally. So for a mining company to say we are temporarily doing this, unless they are using that time to adjust processes and procedures, unless they're using that time to enhance containment objectives over at the mine, they are making a permanent decision. This will be with us for the foreseeable future. The global economy will not shut down for a 3 to 5 year period. So you have to manage through it. It's going to be a new environment. You have to be as safe as possible, but everybody should have an expectation that the virus will be there. And it's just a question about how you mitigate it. It's as simple as that, right? So my wife is a physician in the middle of the hotspot. She's going to start her clinical work with COVID patients on Monday. She gets her ass into work because that's what you have to do to manage the situation. And just like us in the mining industry, we have to get our ass to work and manage the situation. And don't for a second think it's temporary.
Okay, with that, it's funny because the Newcrest guys, in terms of their management of timelines, they normally do a 7 on 7, 7 days on, 7 days off shift, and as per your comment, they've moved now to a 14 days on, 14 days off period in order to be able to try to make sure there's no cross contamination. So, all right, with that, Akiba, thank you very much. Really appreciate your time and great call. And we look forward to the next update in a couple. Forward to the next update in a couple months' time.
All right, great. All right,
thank you. Cheers. Bye-bye.
Bye.